Hey guys, I know it's been a while since I've dropped in on YouTube. I thought it's probably about time. It's been, of course, an interesting time here. I live in the San Francisco area, and we were one of the first regions of the United States to get locked down. Fortunately, while we were number one in cases for a very short period of time, that has tempered things back, but certainly has made life quite slow and given me a lot of time to think about the markets naturally, which is good and bad. But anyway, we thought I'd stop in simply because we're at a very key point here in the Bitcoin market. If you followed along from past video posts, you know that I consider the March 12th breakdown to be very important and has largely changed. At least the way I view the potential scenarios for Bitcoin long term doesn't make me any less bullish necessarily. It just stretches out a lot of the time for my higher targets, which are eventually above six-figure Bitcoin. But I think also I want to make a point and say that halving is a very interesting event within Bitcoin, and I have to say my comment largely is that everyone takes that as bullish as a given. Really, honestly, we haven't had enough sample cases of halvings out in Bitcoin's history to just because the last two are bullish doesn't mean that the third is. But more, I want to make a comment that when the crowd is very bullish and considering such a given, it's really cause for caution. Now, am I bearish? Not necessarily, but ultimately, I watch price, not externalities, as I call them, like halvings. In fact, I think halving can be potentially destructive to Bitcoin if price doesn't rise, because, as we know, the miners are key to Bitcoin's security and well-being, and if the miners can't make money, that's not really a good thing for Bitcoin, to be honest. So that's a counter view, but ultimately, I don't really care about halving per se, but I watch price. Now, when I look at Bitcoin off of the March 12th low, again, March 12th low was, as I say, for the previous long-term view that I held, which you can see in my work. I'm not going to go review it now. I need to say that. Sorry, I'm going to back up a second. I need to say also that potentially in a few days, tentatively scheduled for the 19th, which is Tuesday, we're going to hold another public webinar where I will discuss the long term. It hasn't been scheduled yet. It's going to be short notice. What I would do is watch Twitter, because I will announce it and give the sign up for that webinar on Twitter. Okay, so sorry about that detour, but again, I'm not going to go into a long-term scenario, but March 12th is important. I knew within 24 hours that we weren't going to have a major breakdown because we went right back through resistance that I was watching. So I've been long ever since that day, though I think I had a short just at the end that I took some water on that went underwater for me, but wasn't a major trade for me because I rode that thing down, hedged, shorting against my portfolio. So that's just generally the way I play. But it's been long ever since. I mean, I've taken long and short scalps along the way, so it hasn't been bad. But I have to say that the overall action's been quite boring. And what I want to leave with you is that we're potentially coming into an important sort of terminal region for this pattern. Which, the way I define it, and I certainly have seen enough arguments against this pattern from lots of fellow Elliott Wave analysts. So you can either disagree or just view it very completely different. But I see an ABC pattern. This move off of the March 12th low started with three waves, but since then we've traced out a diagonal. It's pretty clear as a diagonal. I mean, it's following a channel quite nicely. It's just kind of skirting along and putting in multiple hits of the channel. But channels are not the most sustainable pattern from an Elliott Wave perspective. And I do view this next high coming as a channel to be the terminal point, so to speak. There is a chance always that there's another fourth and fifth, so to speak. But right now that C is quite long in relation to the into the A that came off the March 12th low. Okay, so I'm looking at a high right now. I get an ideal target at 11.2. That doesn't mean that's exactly what we hit. Could be a little lower. Could be especially when sentiment starts running quite hot, it could push up to 12K quite easily. But that said, again, I've been playing this largely unhedged since March 12th, and I'm now I've got a little short on. I'm just going to take on some water here, and it doesn't matter to me. It's too small to care. It's just a risk management approach. But I'm going to have to see much more of a technical breakdown. I'm going to have to see Bitcoin drop through the circle fourth for me to turn from saying risky area to now I'm a short-term bear. But this is a cautious area. Now, a lot of note that these, I've got targets higher after this 2 down here. It really depends on what happens with support here. I've just got these hanging out. It's kind of like sketching. I sketch my Elliott wave patterns, and I don't tend to be terribly precise about those things that are not actionable yet. And that I look at that 3 and 4, and just really not even part of the game plan yet. Right now, it's because I tend to lean not short-term trader, but mixing time frames, holding that core for the long term, and then taking little smaller shots here and there to increase the daily income. And right now I'm in a point where that sort of daily approach is probably going to turn short. But really, to get very aggressive on that, I need to see this circle 4, which tees the channel here. In fact, Ethereum has a very similar pattern, and it nominally broke its channel but is following Bitcoin back up here. So I'm just looking at that area, and before I get really aggressive. I have all sorts of approaches to technical indicators, which I'll also be looking at from the 2 hour to the daily to make sure that we are likely to get down on the 2. And right now, I believe, as I recall, the end of the line, if you will, for this circle, this parentheses 2 is 4,500, I believe. I'll have to double check it. I think it'll be a little bit higher once parentheses 1 is filled in, but that is a line in the sand for the most bearish scenario I have on my list, which is a breakdown to 2,000. Now, that's not really what I believe is likely to happen, given all of the context. I think we are likely to see a rally deep into 5 figures later in the year, if not early next year. I don't see 6 figures as very likely like I used to. So anyway, what's the point here? Coming into a key point, I'm getting more cautious personally for a short-term basis. That doesn't make me any less of a bull in the next 6 months, but I don't like giving up what I've gained off that low after experiencing that pain on the March 12th. So I'm going to just be cautious. But again, I'm not going to get very aggressive unless the circle 4 breaks. And what's that? That's about 8,200. So I'm not going to be really aggressive on the short side or hedging even. Until that breaks, but I will probably be looking for like short scalps because I'd rather start to lean that way as we run into the top of the channel. I mean, we can push through the top of the channel, again into like the 12,000 region, which would be a very healthy push over the channel if it did it very directly from here. At a certain point, I do have to be a lot more aggressively bullish. I mean, it really takes a move to 13K from even to worry about it. But what that really means is that until we get a strong reaction in that area and strong bearish indication from price action in that region, 11 to 12, I don't want to be on the other side of a very bullish train if I'm completely wrong here. So when you talk about these diagonals, you really need to see proof that they are ending. But nonetheless, I still want to just express that this area is a region that I see starting to become a little bit risky. All right, guys, that's all I have for today. I hope it's good. Again, the webinar that we tend to hold right now, tentatively on Tuesday, will be announced on Twitter. You can sign up. It's free. It's free to attend, and hope to see you there. It usually has a very good turnout from one. Those public webinars have a huge turnout, so you do definitely want to get your space. So, all right, guys, we'll talk to you soon. Next update, and again, wait for a key point. Perhaps it's lower from here, I would hope, and I'll pay you guys a visit. See you guys soon. Bye.